Ladies and gentlemen, good day and welcome to Q2 and H1 FY26 conference call of Puravankara Limited, hosted by Emkay Global Financial Services Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then zero on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Harsh Pathak from Emkay Global Financial Services. Thank you, and over to you.
Yeah, thanks, Yashasvi. Good evening, everyone. On behalf of Emkay Global, I would like to welcome the management of Puravankara Limited and thank them for this opportunity. We have with us today Mr. Ashish Puravankara, Managing Director, Mr. Manana Sasalu, Chief Executive Officer South, Mr. Rajat Rastogi, Chief Executive Officer West and Commercial Assets, and Mr. Neeraj Gautam, Chief Financial Officer. Also wishing Neerajji the best for his new role as a CFO. I shall now hand over the call to the management for the opening remarks. Over to you, gentlemen.
Thank you, Harsh. Good evening, everyone. Thank you for joining us today. As CFO of Puravankara Limited, I will take a few moments to highlight our key financial and operational achievements for Q2 FY26, provide a context on the macroeconomic environment, and share our outlook for the balance of the year. I will aim to keep this concise while addressing the metrics that matter most to you. Let me start with the broader macro landscape, which continues to underpin our sector's resilience. India's economic delivery is a robust 7.8% year-on-year real GDP growth in Q1 FY26, solidifying our position as the world's fastest growing major economy. The IMF forecasts 6.4% growth for full year, while the RBI has upgraded its projection to 6.8%, fueled by a strong domestic consumption and a rural rebound. On the monetary front, the RBI has cut the repo rate by 100 basis points to 5.5%, adopting neutral stance amid healthy liquidity conditions. In residential real estate, demand remains strong, especially in the 1 to 2 crore segment, with price appreciation ranging from 5 to 17% across major metros like Bangalore, Mumbai, NCR, and Chennai. These fundamental positions Puravankara favorably to capture ongoing market momentum. Turning to our financial and operational performance, in Q2 FY26, we recorded pre-sales of 1,322 crores, a 4% increase from 1,270 crores in Q2 FY25. Notably, this growth was driven solely by first-hand sales, underscoring the enduring customer trust on our portfolio and brand strength. Average price realization rose 7% year-on-year to 8,814 rupees per square foot, reflecting sustained demand and effective pricing discipline. Customer collection reached to 1,047 crore, up 8% from last year, demonstrating strong execution and payment adherence. For H1 FY26, pre-sales total to 2,445 crore, up 4% year-on-year, and collection hit 1,904 crore, up 1% year-on-year, maintaining a solid cash conversion ratio. On the PL side, revenue grew to 681 crore in Q2 compared to 520 crore last year. We reported a loss of 42 crore versus 20 crore in Q2 FY25. Let me clear this. This is largely due to the timing of revenue recognition under Ind AS and our strategic investment in new projects. It is not indicative of any underlying operational weakness. Our cash flows are robust, with operating cash generation supporting our growth initiatives, and our balance sheet remains strong. Shifting to business development, we have made meaningful strides in bolstering our pipeline during H1 FY26, adding over 6.36 million square feet of developable area with a potential GDV of approximately 9,100 crore. Key additions include a 24.6 acres partnership at KIDB Hardware Park in North Bengaluru, a preferred developer status for 8 societies in Chembur, Mumbai, adding to 1.2 million square feet, a 5.5 acre joint development in Belgare, East Bangalore, valued at 1,000 crore GDV. The prestigious Malabar Hills redevelopment in Mumbai, contributing to 0.7 million square feet and a GDV of 2,700 crore premium residential there. These moves diversify our exposure across premium and mid-income segments, enhancing revenue visibility. Our land bank now exceeds 32 million square feet, providing multi-year runway for launches and de-risking our growth trajectory. Looking forward, our H2 FY26 pipeline includes 15.53 million square feet across Mumbai, Bengaluru, Chennai, and Pune. This carries a sales potential of 5,000 crore plus, which we expect to accelerate pre-sales momentum. With resilience demand, favorable financing, and our proven execution track record, we are well equipped to deliver on these opportunities and sustain profitability improvements. In summary, Q2 FY26 was marked by steady top-line growth, disciplined cash management, and targeted expansion that fortifies our long-term value creation. Despite the reported loss, our fundamentals are sound, healthy collections, and fortified balance sheet in a high-potential pipeline. We are committed to optimize costs, enhance efficiency, and driving shareholders' return as we navigate the second half. Thank you for the continued support. Now I'll open the floor for questions. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and one on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. We'll take our first question from the line of Deepak Purswani from Swan Investments. Please go ahead.
Yeah. Good evening, sir, and thank you for the opportunity. So my first question is related to the Mumbai pipeline, especially for the Andheri project and Miami project. It seems the launch has been delayed by another 3-4 months. If you can give broader sense, how should we see and what are the reasons we are facing the delays vis-a-vis the other players? That is my first question on the Mumbai. If you can please explain.
I will request my colleague, Mr. Rajat, to answer this question. He is there in the call.
Yeah, I'm there. Hi, Deepak ji. Just to answer your question first on the Andheri launch. Andheri launch, we have received all the approvals, including MOEF. Vacation notice has already been served to the society. As we speak, members are leaving the society. We are in all good position to launch it in January. In fact, our sales office work and everything else is also started. Regarding the Miami launch, our approvals are already going. We have already informed earlier that Miami launch is going to be either in Q4 or in beginning of Q1 next financial year. The way the approvals are progressing, we are most likely to have it in the month of March or in the month of April or May in next year. So we seem to be on track. We are absolutely facing no regulatory problems. Our approvals are on track, and we're probably getting approved at one of the fastest pace in the industry.
Maybe you can update them on your Bandra and your Thane approvals as well.
Yeah, of course. And just to also inform you, we are also on the Thane approvals. We are working on the approvals. We are expecting to get all the requisite approvals by end of December. All good to launch by Q4 of this financial year. We should be able to get close to around 6 lakh square feet of inventory in Thane. In Bandra, we've also received the concession plans. We're expecting the IOD to come within a week's time, and post that we'll serve the vacation notice for the society. Just to inform on Bandra as well, we are looking at getting all the approvals, including the environment approval by end of December, post which I think we'll start working on the launch timeline. So Bandra also, we are very, very positive that we should be able to launch in Q4 of this financial year.
So would it fair to see that 3 out of the 4 projects at least should see launching in Q4 for the Mumbai project?
Yeah, absolutely right.
Okay. And now moving to the Bangalore market as a whole. There also, if I were to look into some of the key projects which we were looking to launch in Q3, that has been now moved to the Q4 FY26, like Bellandur, West End, and some of the other projects which has been pushed to the Q4. And especially in the context now, again, Bangalore Municipal Corporation would also come out with the election in some time. So in this context, how should we see the launch pipeline for our core market?
Yeah, this is Malana here. So I'll just try and answer your question. So with regards to the launches that Hebbagodi and KIADB are coming in this quarter itself, that means that the EOI program and other things that we are starting them. And it's just that MOEF one approval, that is the committee meeting got successfully postponed for last 3 weeks or 4 weeks, and which has taken some time. And rest of the projects are there in the Q4. All right. Some of them may go to the first quarter of the next year, but largely Mallasandra. I'm just looking at the investment proposal that the ICP that what we have circulated, and I'm reading out of that. Mallasandra, Kanakapura, and West End, Hennur Road, and Hebbagodi and KDB, I don't see any problem. Bellandur is a touch and go, and City Spire could be a touch and go, and Grand Hills could be a touch and go. That means those 3 projects may go to the first quarter of next year. Otherwise, as planned, that we are in line for the launches. Just to give you the perspective, and we were hit by many number of regulatory changes that came about, starting from the e-Khata and then registrations, because that once the e-Khata is done, the registration department had to have their software working with the revenue department. That was taking some time. Then we had the creation of GBA, that is 5 different corporations, because of which the files had to be moved from one place to another place. So with all this, I think we're still confident that we are in for the launches. And I also believe that we are in the fag end of the whole transition. In the long run, which may work out very well for Bangalore, but we got a little bit pushed back on our approvals because of this.
Okay. And again, if I were to look into the cash flow statement, interest expenses have seen a sharp rise in this time as well. This has moved to the 177 crore. If you can give a sense why there has been a sharp jump in the interest expenses during this time.
Cash flow. One minute. There is no sharp jump, I would say. The last quarter also it was about 160 odd crore, and now it's up 176. And this interest payment is in the line of the debt which we have, and some of the SDFC loan which facility which we have taken, which is payable enabled in nature. However, we choose to pay them on time and not accruing that interest, and will be paid when projects are completed. And hence the interest, as in when project is doing well, I am serving the interest IRR which is applicable, and that is why it's increased marginally. Otherwise, as far as the cost for the quarter is concerned, is about 168.58 crore for the quarter. If I look at immediate previous quarter, it is 160.90 crore, and is compared to year hence, it was 140 crore.
Just to add to that we had this 1,150 crore rupees of payable enabled structure at 16%, 17% of money, and then it took this long, almost a year, 15 minutes for the projects to throw the cash flows out, and from that cash flows that we are now servicing that debt, because of the higher debt cost that it has, that we are that it looks like that we have paid the debt higher. In fact, what's going to happen is that at some point of time, because of healthy cash flows, that we may even look at reducing our debt position at higher cost and moving towards the lower debt cost. So it's a good thing that is happening. Before the good thing that's happening, you're seeing a little bit of more
payout. Because payout is accrued today in the ZFC facility. We are 100% paid on the IRR. There's no interest is accrued in the books and not paid, 100% paid. And hence, on a tenor of the facility, will be end up paying less interest because we are paying ahead on the time. As far as cost to the, as I explained once again, if you look at the profit and loss statement, as far as cost which is going to the P&L, it's 168 crore. If I compare to immediate previous quarter, it was 160 crore. So it's not a substantial increase, just a marginal increase of interest.
Okay. And then from the cash flow statement point of view, year as a whole for FY26, how should we see the collection for this year and construction outflow?
If you look at the collection, we have collected 1,900 crore for the half year basis, and as construction progress is going fast, collection has been robust, and we expect it to be better onwards. Because the collection which will come from my ongoing projects where construction is going in fast pace, plus the launch guidance, just now both of you have spoken, the moment we launch these projects, that is the incremental collection will come, and hence it will enhance here onwards.
We've done a pure construction of 1,000 crore rupees that we have done, and 1,950 crore rupees is what we have collected. And as you can see that it is going, almost like a 2x kind of a position. And in the third and the fourth quarter next half year, and I don't see that from the ongoing projects where the construction is going on and the collections are going on, that should remain same. And whatever the additional collections that we are going to do from the launches is going to become addition to the cash flows that we already have.
Okay. And finally, if you can give an update on the HDFC platform side, how much capital has been deployed so far on that platform? And also, any thoughts on the Pune launch Pune business development activity? If you can share thoughts on that part, that would be really helpful. That's it from my end.
As far as HDFC Capital is concerned, we have already deployed 700 crore out of the 1150 crore. And just to add, out of the 700 crore which we have deployed, we have already repaid also about 110 crore as while we are speaking today. And remaining 450 crore also we have given them a utilization plan. The few land parcel has already been identified and due diligence are on, and we are expecting to utilize in next 3 to 6 months time period that money as well to fund our growth. As far as Pune is concerned, Pune we have last Purva atmosphere we have launched, and I would request Mr. Rajat to add some more thoughts about our plans in Pune.
So yeah, thanks, Neeraj. So Pune, we are obviously aggressively expanding in Pune. We're looking at much more opportunities in Pune, primarily in the western side of Pune, where right now we are in kind of advanced discussions for at least a couple of land parcels in the west side of Pune. Also, we have started looking at redevelopment opportunities in Pune since we have done so well in the Mumbai market. We're looking at a lot of encouragement from Pune societies with regards to Puravankara as a redevelopment partner. So that is another one segment that we're looking at. And we are very hopeful that in the next quarter or 2 quarters, we should be able to at least get at least a couple of land parcels closures in Pune. Having said that, we still have enough and more inventory right now in our 4 ongoing projects in Pune, which is close to around 4,000 crores. And right now, the brand is playing a very, very strong role. I think we're doing very well in that concept launch also and the project also. So we are pretty, I think, optimistic about the Pune market.
Okay. Thank you. And wish you all the best.
Thank you. Ladies and gentlemen, to ask a question, please press star and 1 on your phone. Participants who wish to ask a question are requested to press star and 1 on their phone now. We have a question from the line of Harsh Pathak from Emkay Global Financial Services. Please go ahead.
Yeah, thanks for the opportunity. So my question is on the Thane project. So we are seeing that, the inventory there is still high. I mean, in Panorama, it's around 73%, whereas in the first phase also there is 59%. So how is the space there? What kind of demand we are seeing, and, what are the steps we are taking to push sales at this project?
Yeah. So just to explain you about the Thane project, the existing towers we have not opened for sale. We are completing the existing towers. We're expecting the OC to come in quarter 4 for the existing towers, and that's when we're going to open these towers for sale. From the existing inventory right now, we are looking at launching 2 towers, which is one which is completed tower and another one a new tower, the one that we had launched. So hopefully in quarter 4, I just now said that we're looking at the launch of that tower. And that's when we're going to see much more inventory being sold. Right now, On the overall market positioning side, we are very well positioned right now. We're getting a good pricing in the market. Our current realization is in close to around 20,000 rupees a square feet. So from the launch perspective, we are quite hopeful that we'll do a very successful launch in quarter four.
Just to put that into perspective, so when we acquired the project, there was existing building there with sales done. So the strategic call was today, let's get that front building done. Like I just said, we'll be completing that building in the next quarter. And we just believe that we'll get a greater value. So that stock was never opened up for sale. Focus is on completing it and getting a higher value for a completed product. On the towers that we have opened up, we have seen extremely good sales. Now we're waiting for additional approvals to come, and then we launch those phases. So Thane is absolutely not a concern in terms of sales or velocity.
Oh, sure. Understood. And also on the commercial side, so Zentek, since we are open for sale, there also, I mean, the inventory this quarter, we have sold around 2% of the inventory because from 95 it has moved to 93. So what kind of response are we seeing there? And also, if you can give some update on the AeroCity project, please.
Yeah, sure. On the Zentek project, what you're seeing, we have sold almost 60,000 square feet of area. We have also leased, which we are going to be announcing very soon, a substantial area to one of the large retail players. I think that we are announcing very soon, which is close to around 80,000 odd square feet. We are getting very good response right now. We're in discussions to do a couple of large leasing and come sales transactions. So Zentek is getting good demand from the micro market, and that's what we are poised to do it. We are hopeful by the end of this year, we'll be able to do a substantial amount of sales in Zentek. AeroCity is also, just to coming back on Zentek, we're looking at getting the OC of the asset by February of the financial year. So hopefully in quarter four, we'll get the OC for Zentek. And then that's when we say we'll expect the sales to get even more robust. On AeroCity, right now, we are fulfilling a lot of RFPs right now. A lot of large players have shown interest in AeroCity. We are hoping to get the OC of AeroCity in January, which is close to 1.2 million this year. And that's when I think the leasing will gain momentum of that asset. So on the AOP piece, on the plan piece, we seem to be on track on both these assets on the commercial side.
So, to dig more on the AeroCity project, maybe if we can, give some color on, what kind of interest we are seeing. I think it's, around 2 million square feet of an area. So what kind of interest have we seen and at what rates are we targeting? I mean, if you can give some color on, with respect to the vicinity rates, something like that, please.
Yeah. So I think just to give you a perspective, right now we are getting OC for the first 1.2 million square feet. The balance 9 lakh odd square feet is something that we will do build in phase 2, which will start pouring concrete in the next financial year. On the ongoing rental side, the current micro market is running at a rental of around 55 to 60 rupees a square feet on the leasable area. And most of the traction that we are receiving right now is from large IT players, who've been looking at a 3 to 4 lakh kind of square feet area. So I think most of these transactions will fructify once we get closer to OC. And as we speak, I think a lot of visits are happening at the site. So we are very hopeful that we should be able to close a large transaction in AeroCity soon.
Understood. And any update on the Hebbal land?
Hebbal land, we are working. I think there was a work in progress. So we've got a lot of work done in last few months. We should be able to conclude the sale agreement by end of December. And start putting for approval. So I think we should be able to get the approvals in next 6 months, and then we'll start pouring concrete.
Sure. And any plans on adding further commercial assets? I mean, if we have some pipeline, or are we scouting some projects there, because we are hearing more and more developers get on the commercial side. So any additions that we have in our plans apart from the assets that we are already having?
Yeah, of course. I think we're seeing commercial as a good growth sector for us. I think as we're building a large annuity income. Right now, AeroCity and Hebbal will add as an annuity income for us by 2030. We are also looking at opportunities in growing in good markets like Pune, where we are looking at business development activities for commercial. Yeah, I think from a business perspective, we are quite optimistic about this segment, and we'll see if the right opportunity comes. We'll look at investing in that opportunity.
Sure. So, now coming to the debt side, I mean, it's commendable that despite the project additions, I understand they are largely asset-light in nature. So despite these additions, the debt has remained largely stable. So, and I understand you did highlight upon the collections part. So how do we see debt by the end of the year, or maybe if you can give some target for FY 27-28?
So if you look at our slide number 22 on our presentation, if I not be doing anything, then debt will be down by 800 crore in next 12 months. That's the scheduled repayment. And another next second year it will be down by 1,646 crore. So we have given the debt repayment schedule how the next 4 years, if assuming I am not getting any debt, that will automatically become zero. However, business is built on the basis of leverage, and as today opportunities are more in the marketplace, and we are in growth phase, and hence we will be continue to be utilizing the capital which is available to acquire land and fund our growth. But at the same time, we are mindful about the debt, and some of the debt which will be repaid through the scheduled repayment, as I mentioned to you during the some time back, the SDFC first platform which we signed about a year back. Out of that, the 12 month was a lock-in period. The day lock-in period over, the first tranche of repayment is done by 100 crore, and we will be progressing as we launching project. We keep paying the debt, and then continuously we are monitoring the leverage versus the growth, and will be continuously keeping the balance of it.
Understood. So, taking it that forward, so on the project additions part, I mean, I understand Rajat highlighted for the Pune region. So additionally, how is the pipeline looking from the project additions front, especially in Mumbai and the South region? And what kind of additions are we expecting? Will there be more outright acquisitions, or the focus remains on the asset model?
So I'll just speak for South, Malana here.
Okay.
I'll speak for the South, and basically the pipeline is quite strong. There's quite a number of opportunities that we are pursuing in this quarter itself. As you saw that the KADB Hardware Park and Balagere we closed in South, and of course West. Rajat is going to talk about Chembur and Malabar Hills. So coming back to the pipeline that is there, that without getting into too much of details, is because the last signatures have not happened. We have around 400 crore rupees from HDFC to be invested. So we have, which is in our good interest, that we have to deploy it as quickly as possible. To answer your question that whether we are going to go for joint development kind of an arrangement or outright, it's always an evaluation and also the preference of the landlord. When there is a money that's available for us at a 17% payable when able, if the landlord is going to make 25% from the current valuation of the land, definitely we want to take that risk and buy the land parcel and then go for it, right? So it is just that calculation and also of course capital investment and the risk against it that will be weighed, and then the decisions are going to be taken. So it's one way or the other. It is not really that how much capital we want to invest, and there is no target. Any capital for growth will be invested. So that is the way it works in terms of the investment side.
So just to add to what Malana said, I mean, so we continue to look at good opportunities in Mumbai and Pune. We obviously the preferred player right now in the Mumbai redevelopment market. Continue to add market assets like Malabar Hills and Chembur. And right now also as we speak, we're evaluating top redevelopment opportunities. On a business momentum side, as I think Malana also said, that we are agnostic to the kind of opportunity coming. We evaluate on the basis of our internal parameters, and be it a land buyout or a JDA or a redevelopment, we look at opportunity and then we decide whether we want to do it. But just to answer your question, I think we're very hopeful and very positive. I think the market is doing pretty well, and we'll continue to add good assets in our portfolio. Right now, we are in advanced discussion with a couple of assets, and we hope to close them in the next half of the financial year.
So maybe what would be the total GDV that we are currently into active discussions or maybe in advanced stages of discussions with the landlords?
What I would say, Harsh, is for whatever we acquired, H1 is GDV is worth 9,100 crore, which already published. I also said, And rest of the, as Mr. Malana and Mr. Rajat said, unless we sign the last paper, we will not be disclosing, or it is not appropriate on our part to disclose what is GDV, what is the area, what is the location, etc. And as and when we conclude the deal, we will keep updating and announcing those details.
Understood. And one last question from my side. For the Malabar Hill project, what is the kind of profitability that, we have kept into the consideration? What is the project level EBITDA margin that we have targeted?
I would request Mr. Rajat to take this question.
Yeah. So I think without disclosing the exact EBITDA, I think the margins are pretty healthy. Of course, Malabar Hill is the most premium part of Mumbai, and of course, most of the premium part of India. So the margins are pretty strong and healthy, and I think the margins are also meeting our internal requirements that are there. So the EBITDA margins, if I can tell you, is upwards of 30% roughly.
Sure. That answers. Thanks a lot for taking my questions.
Thank you. We'll take our next question from the line of Deepak Perswani from Swan Investments. Please go ahead.
Yeah. Thank you for the follow-up opportunity, sir. Sir, firstly, wanted to check it out. In the first half, last year we did a pre-sales of 5,000 crore. This time, in first half, on the sustained basis, we had done a pre-sales of roughly 2,400 and something crore. So, if you can share the broader thoughts, how should we look into FY26 and 27 pre-sales based on our launch pipeline, as well as how do you see the current demand environment in each of the micro markets?
Looking at the numbers for FY27 and so on and so forth would be a little bit of a stretch. And whatever is left out in this year, the second half of the year, as you rightly pointed out, we do around 1,250 to 1,300 crore rupees of sustenance. And we think that we will continue to have that kind of sustenance numbers, more or less. So, which means that we got another 2,600 crore rupees. And as we said that, we have around 12,000 crore rupees of launches that's coming up. Even if you're able to launch around 80% of that, 9,000 crore rupees or 10,000 crore rupees, we sell anywhere from 30 to 50%. And so I would not want to peg a number. I will let you do the calculation by yourself. So when some project could be 20%, some project could be 40%. So it's anybody's guess, right? But bringing the product to the market is going to be our responsibility, and that's probably going to happen up to around 9,000 crore rupees to 10,000 crore rupees.
So just to answer on the demand side, I think the demand seems to be pretty robust for top branded players like Puravankara. In all the micro markets where we are operating right now, I think we continue to be one of the top leaders in the micro market, both on the pricing side and also on the velocity side. So we're obviously very, very positive with these launches coming in, I think, and now I'm sure we'll be able to showcase Puravankara brands and the kind of Puravankara products, especially in markets like Mumbai, where we'll be something new like Andheri Lokhandwala or maybe the Pali Hill product that we have built in. So we continue to be very, very positive with the market. The current market trends is very encouraging, so we don't see any challenges out there.
Okay. And just continuing on the launch pipeline, we mentioned about we would be looking out to launch 12,000 crore kind of inventory in the H2. So just wanted to seek it out. Is it a full project, or what would be the inventory value out of this that would get launched?
So speaking about South, and if you really look at around 11 projects, 9 in Bangalore, 1 in Coimbatore, 1 in Cochin, out of which, the KIADB and the Cochin project, that is the Windward 2, are the two large projects, right? So basically they will run for a longer time. And if you look at all other projects, it's now 700,000, 600,000, 440,000, 520,000. We believe that there is no phasing for any of these things. They're all one phase development and one phase launch. So looking at the demand that what we have in KIADB, even though it is going to be in excess of 2,800 units, I believe it is going to be one launch, and meaning to say that tower by tower that we sell, but launch is going to be one launch. So probably that answers your question, because it's quite distributed. I don't see a problem that all of them is going to be in a single launch.
So, for example, why I'm coming out to that point, for example, if I'm looking into the presentation, the Deccan project, that is a 0.36 million square feet sellable area. Out of this, we are looking out to launch only the 60,000 square feet.
Yeah, I
So
think I wanted to add to what Malana said. In the West, I think the size of the projects are pretty huge, both in terms of the value and also sometimes in terms of the area also. Like in Thane is a very large project, so we will be launching in tranches, including Andheri Lokhandwala, where we're going to we will do our launches in 2 phases. Obviously getting 1,000 odd crores of inventory, worth of inventory in Andheri Lokhandwala, almost around 1,000 crores worth of inventory in Thane. In Pali also, I think we would like to do it at 60,000-70,000 square feet of area in tranches, because I think this is a very, very high-end, top-of-the-line project, and we would like to first showcase to the market, launch a small inventory, and then probably you go with a larger launch. That's what the plan is.
If I can add help you with the math, if you are looking at our presentation, slide number 19, which we are saying is we have launched by guidance is 15.46 million square feet. Out of that, we'll take to the market 9.28 million square feet. If you look at the last row on the slide, so if I value today 9.28 million square feet as an average rate between Mumbai and Bangalore and Pune, or say 11,000 rupees per square feet, it's come about 10,000 crore value, and hence that is what Malana had said while speaking, that we'll be bringing the inventory, about 12,000 crore of inventory we'll bringing to the market. Hope that clarifies.
Yeah, that clarifies my question. Yeah. And second part, if you can also give some sense of project completion and delivery timeline. I think in the first half, we have done approximately 1,300 units. How should we this delivery part in second half, and how should we see the revenue recognition in the second half? Is it going to grow exponentially with the any other significant project which is getting completed and hitting the revenues, or how should we see from the P&L perspective in the second half of FY26?
Sure. So if you look at our slide number 34 in our ICP, we have 2.97 million square feet ready inventory OC received, 2,352 units. Beside this, we are going to get some more OC during the period, during the second half year of the period. And there were some issues in terms of giving possession and handover in Bangalore because of the e-Khata issue and the registration issue, as you would have read in the newspaper. And that is where 2 of our large projects we could not give possession. However, our teams are working with the government, and there is some the census is also going on in the state government. Thereby, the government officials are a bit busy. But now I think everything is falling in place, and we are reasonably sure that we'll be able to hand over substantial part of it during the second half of the period. And year as a whole, our numbers will be much better than which we have published as of now.
Okay. So, initial plan of delivering 3,000 plus 100 units during this year, are we on track? Or
absolutely on track.
Just to round it off, it's basically 4.3 million square feet is what we thought about. We gave the guidance that we are going to be delivering, and so basically now around 1.3 million is what we have delivered. Another 3 million square feet is what what needs to be just registered. It is nothing to do with the construction delivery. Construction is over. More than OC has been received. More than 2,000 units. The snags have already been corrected, where the customers have come and accepted. It is the question here is that without the registration, it is hard to hand it over to the customer. So we have not handed over without the registration. We are not able to recognize them as sold units. So that's the reason that we are waiting for it. And it's, in fact, you will see from this quarter and the next quarter that, in 5 months remaining in this second half of the year, we should be doing well.
Okay. And just to get the update on recent 4 project addition which we have done, if you can give the broader status on each of these projects, how should we see into each of these projects, and what would be broadly the timeline we are considering for launching each of the projects? For example, North Bangalore, Chembur, Mumbai, and then East Bangalore and Malabar Hills.
I'll talk about the two projects in Bangalore, the 24.59 acres in Hardware Park. It's around 3.48 million square feet of developable area. I think we signed the agreement some 7 months back or so, 6.5, 7 months back, and in probably January, February that this project is going to get launched. We are in substantially that, the approvals are already there, and a little bit of that MOAF and PCB approvals are pending, and otherwise everything is ready, and I am sure that January, February it will happen. Same thing with Balagere. Same again, it was signed 6 months back. Again, it is in advanced stage of approvals. That is joint development in East Bangalore. That's what we call that. So both of them, I think both of them should be in this year.
Other two projects which we added during the first half was eight societies at Chembur and the Malabar Hills in the Malabar Hills, another redevelopment project. I'm requesting Mr. Rajat to throw some light on that, our plans for launch and these two projects.
Yeah. So I think both these projects, I think are redevelopment, and they're all in this 33-9 scheme. And you're aware this redevelopment projects are slightly taking normally a longer time because of the society involvement and the DA process, etc. So just to give time perspective, I think we should be able to launch both these projects by quarter 3 or quarter 4 in the next financial year.
Okay. And in both of these redevelopment projects, what is the kind of area sharing or broad sharing which has been done with the tenant, or how should we see from the profitability perspective in each of these projects?
So both the projects are really, in terms of the locations, Chembur being, I think, one of the most hottest property markets right now in MMR. This is a close to a 5-acre land parcel that we're doing in Chembur, and probably one of the largest land parcels that we're doing in Malabar Hill. Both these projects are really one of the best land parcels that you have in the micro market, and we are very, I think, on the profitability side, I think both of them will fetch out better than the market returns right now. I think because one is the size of the project, and also I think the location that they are in. So as I said earlier, also I think we're very, very positive with both these assets, and we are working very hard to finalize the due diligence and get these launches on track.
Okay. Thank you, and wish you all the best.
Thank you.
Thank you. Ladies and gentlemen, to ask a question, please press star and 1 on your phone. We'll take our next question from the line of Chintan Mehta from Puniska Family Office. Please go ahead.
Thanks for the opportunity. Sir, I just want to understand on debt part, what is the peak debt which we are targeting, even in a per square foot basis? And we can expect debt per square foot for commercial to start declining once we monetize or rental yield start coming? Thank you.
Chintan, if you look at today, as an end of the quarter, we were a net debt of 2,894 crore. And if I look at the debt in terms of per square feet, per square feet debt on residential was 1,111 rupees. And residential it was blended debt, and if residential it was 859 rupees per square feet, and commercial it was 252 rupees per square feet. Our commercial debt comprise of the debt for the two of our commercial projects, which the project Gentech, which we have already sold part of it, about 50,000 square feet we already sold, and as it completes, we are planning to sell this project, and as we sell the project, the debt will be repaid. And the commercial project AeroCity, where we are planning to retain and lease it out. Once we lease this asset, we have taken a loan from SBI to construct the finance. There will be some more drawdown will happen for completing this asset. Once asset is complete, we'll be convert this loan to a LRD facility. That is the terms already approved by SBI and the construction finance itself. And hence, it will go up bit in the case of AeroCity to fund the rest of the construction cost. But once project is completed and leased, and once we convert this loan into LRD facility, it will come down as far as per square feet basis, as far as overall also.
Okay. And sir, both of these major two projects will get will completed by next year and rental yield. So other commercial projects which you are targeting next 2 financial year, if you can throw some light on it.
And this two assets, as Mr. Rajat said during his conversation, we are expecting to complete or get the OC for both these assets on or before the March 31st. And Gentech, which is the first asset which I have spoken, have already partly sold, and leasing is also underway, and we will be targeting to selling the substantial part of this asset during the coming financial year. As far as the second asset is concerned, as it completes, a lot of inquiries are being done. Our target to lease is 1.2 million square feet. Once leasing will start, then as Mr. Rajat said, we will be targeting to start construction for rest of the area in the next financial year.
Okay. Thank you so much. All the best.
Thank you. Ladies and gentlemen, to ask a question, please press star and 1 on your phone. Participants are requested to press star and 1 to ask a question. Ladies and gentlemen, to ask a question, please press star and 1 on your phone now. As there are no further questions, I now hand over the call to management for closing comments. Over to you, sir.
Thank you everybody for joining for this call. And if you need any further question, any clarification, please write to us. Me and my team is always available to answer your all questions and clarification. Thank you so much once again.
Thank you. On behalf of Emkay Global Financial Services Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.
Thank you.